pandemic put geopolitical activity on the backbench in regards to global supply chains, with congestion and delays felt by the impact of delays caused by isolation rules in many cases. Shipping is a commodity in itself, being dependent on the supply and demand matrix, with the dry bulk rates being forecast for an increase. In a snapshot, liquid natural gas and LPG sector is bullish for oil tankers. However, the diversion of trade routes to China and India, as well as strong lobbying from activists regarding ESG policies, could have an impact. Russia is a major global exporter of commodities, providing 10% approximately of global oil and 38% of Europe's natural gas needs, as well as 30% of their crude oil from Russia. The world in some ways needs Russia, but that's equally true in reverse, with Russia needing the world. Please subscribe to the channel. Keep watching to find out more. Sage here for kalkinemedia. Russia's total exports brought the country $489.8 billion in 2021, and this was comprised of $110.2 billion from crude oil, $68.7 billion from oil products and $54.2 billion from the pipeline natural gas, as well as $7.6 billion from liquefied natural gas. Russia is now the world's most sanctioned country, putting Iran in the second position, with the highly likely situation emerging of the US releasing its sanctions of Iranian light oil, which has a very similar composite to Russian Urals. If the US does go ahead with the lifting of sanctions on what became a muted Iranian nuclear deal, it would mean Iran could provide the oil market with 1.5 to 2 million barrels per day of oil by the end of 2022. Some analysts believe this would offer the crude oil price to be lowered by about $10 per BBL. The USA has now imposed sanctions on Russian oil, preventing its import into the country. And this was after major oil companies such as BP, ExxonMobil and Shell all have cut their ties with the major Russian oil projects. As commodities are constantly being shipped across the world to make the most of global infrastructure for refining, storage and distribution, rerouting of commodities is a must, which will impact some shipping routes in an already pressurised industry where freight costs have been elevated to over 400% from their 2019 levels. At present, the world order book for new ships is at its lowest since the turn of the 21st century. The Panamax mid-sized fleets are the most relevant to the current shifting in circumstances, and most shipping freight is paid at the Baltic spot rate. Environmental sanctions, however, could mean that over 50% of the global shipping fleet will need to be replaced by 2030. So to make up for the higher costs of fuel, ships will ultimately travel slower, which could reduce their fuel consumption by close to 50%. Now, without tending towards profiteering, as it should be organic economic growth that stimulates the market and not the spoils of war, we will mention a few shipping companies that may prove profitable during this time of high market volatility and increased inflation due to high oil prices and freight. Now, bearing all this in mind, in 2021, the BDRY Breakwave Shipping ETF had 100% of its basket of stocks in the top 10 earners for the sector. It is up 70.19% over the last year, according to data from Google Finance. The first stock we have for you today is Costamare on the New York Stock Exchange as CMRE. And this company has gained from its increased exposure to dry bulk, which generated $41.2 million in net income during the fourth quarter. The company has only recently expanded into the sector, which makes it impressive that CMRE saw the year out with $552.3 million worth of total liquidity. This included 2 scheduled share repurchase programs totaling an amount of $300 million. The share price is up 6.29% to reach $16.06. That was current at 3 p.m. Australian Eastern Daylight Savings Time, 11th of March. Genco Shipping and Trading is next on the New York Stock Exchange as GNK. GNK finished the quarter well, being up in revenue at $121 million. However, its altered cash position due to a delivery of 2 Ultramaxes in January reduced this to closer to $80 million. The company successfully paid down a large sum of debt in the last quarter to $166 million, which they have plans to reduce further in the first quarter by approximately $18 million, all part of their conservative financial policy management. GNK stock is up today 3.69% at $21.36. Lastly, we have Eagle Bulk Shipping on the NASDAQ as EGLE. The share price is up by 4.63% today, sitting at $66.25. Operating costs have increased for this company. They are focused on dry bulk and mid-sized vessels. The company is interested in expanding their fleet. Following on with their 2021 growth spending of $119 million, they were also able to reduce their debt. The company reported an adjusted EBITDA of $91.6 million and attributable net income to common shareholders of $69.3 million or $4.28 per diluted share. Now, this information has been compiled from the company's fourth quarter financials released recently via conference calls. It's for informational purposes and not financial advice. Please do your own due diligence before taking any open positions on these stocks. Thanks for watching the report, and if you do like the information, let us know by liking, sharing and commenting on the video below. Subscribe to the channel and press the bell icon to be notified of the latest videos from Kalkine. For more articles like this, please head to the website. It's kalkinemedia.com. I'm Sage for Kalkine Media.